Welcome back, traders. This is Paramay Trades, and this is Paramay's Trade Journal. Again, not an advisor. This is for educational purposes only. This video is a part of my own speculating trade journal. So we just got done with the Friday roundup here. Now we're going to take a look at ZM, the obvious ZM. Just because within the last 3 weeks, and if we didn't do a video prior to, we said we were gonna. So I apologize if we didn't. I'll have to take a look at the video list. But just looking at CoT, looking at pivots, looking at price action, looking at the last couple of weeks of trading on ZM to look where we could have found an entry. Take a look at what we thought was happening with commercial interest. Noticing, recognizing the extreme positive outlook that ZM was boasting from the commitment of traders. And we were bullish on this. We were bullish on ZM, and we thought that this was going to go to the upside. We thought price action would trade higher. I had a little bit of fuckery going on with the chart. But ultimately what we thought, and we posted this just previously, we tapped into this a little bit on the Friday roundup. We just had a perfect setup going on with ZM. Let's get the trusty tool out here and just take a look. So we had some, we had some frustration going on here as a trader, but we had to be alert and aware. With the trailing stop, we knew that comps were getting bullish here. We thought there would be a pullback. We broke the range, we pulled back, and we continued in sentiment's direction. Now, what do I mean by breaking the range? One of our leading indicators, one that we follow quite consistently, is average true range. Actually, we didn't break the range. Came up, we tapped the range, and then we broke the range. So what we like to see is a break of the range and a pullback, and then a continue in sentiment's direction. We don't always get it. It's not always perfect, and you can change this to a different factor level if you'd like, or a different length. We use 9 and a 2.5. So it's 9 days. On the daily chart it's 9 days. We use 9 days. But here's, this was our confirmation. A break of this range was confirmation up in here. Broke the range. Broke that range, came back down, retested this area. Retested this high. Right up in that pivot. We're having trouble getting over that anyway, right? They broke it handsomely. Came back down, retested it, and away we went. So we did, there was a little bit of frustration on our part, being in this trade. We got stopped out with, with our trailing stop, but if you bought the bottom of the range, it looked pretty good. And we'll take a look at the lower time frames to see where we would have made an entry. So just coming back to our analysis and what we always look for, or at least what I always look for with commitment of traders is, bullish on the part of commitment of traders, positive outlook, more net long contracts than short, above the 80% range, which is extreme bias. And they held consistent for 1, 2, 3, 4, 5, 6 weeks now. And it's not even that they were holding a bullish bias for that long, or for that time period. Look where it came from. Look at the sentiment shift in direction. So it's not a crystal ball. You don't say, well, they're getting bullish here, I'm going to buy, I'm going to buy. Oh, you could have. Extreme positive outlook on the 3-year index and the 6-month index. This was the key indicator. So we We were in down here. We got stopped out. We got back in. We like to see this bullish on the comms part, diminishing open interest, relatively low. This is when you take it the other way. WPR oversold, and market sentiment is low. We broke the range, and there it is. So for weeks we've been bullish on ZM. I mean, and it was a frustrating chart to be in up here and watch it. I mean, this shook a lot of people out. This shook a lot of folks out. But like I always look for, at least on the lower time frame charts too, is market sentiment. Something new I've been working with. But I like to see this in conjunction with the higher time frame chart. Questionable pivot, higher low, low, higher low, and good defensive pivot here. They didn't breach. Came pretty close, but they didn't. Here was your buy opportunity. If you were brave enough to take a long position off of this pivot and into this cluster, with sentiment as low as it was, with commercial interest as bullish as it was, you were a real winner here. And they're still extremely bullish on ZM. So you got to look for need to look for a safe entry. And we're going to have to, looking forward. What are we looking for? We got higher highs, higher highs, higher highs. Does this look like it's slowing down? It doesn't look like it's slowing down. Could we get a nasty dip like we did here? We certainly could. That's why you have a trailing stop. But I think if you get an opportunity to get a dip in here somewhere, with as bullish as commercial interest is, especially within the last week printing a new net long high, is buying dips such a bad idea? Doesn't look like it. Look pretty good. Market sentiment's about middle ground, it would seem. A little higher than middle ground. Gonna have to see something from this chart, but for the time being, trend is up. Until come on now. Let's get it. Until otherwise stated here, the trend is up. I mean, you put whatever moving average you want on here and claim that whatever moving average is either support or resistance, but I don't know if you fucking hold much stock in that. I really don't. Trend is up, man. Trend is up. To get an opportunity to buy a dip, I would do it. I'm not trying to advise. I think I'm talking mostly to myself. So we say we. I say we a lot. I say we a lot. Why do I say we? This is my trade journal. Why do I say we? Well, because there's just this nagging voice in your head sometimes that tells you either not to do something or to do something. That's like a protective aspect, right? Many facets of the mind. And sometimes you're positive, you're confident, you're a little overconfident. You've got that negative aspect that doesn't want to get you into the trade because you think it's going to turn the other way on you. It could. I'm not huge on, rising wedges in terms of direction. Because sometimes, and there's a percentage of times where it seems like they break up versus down. And everybody will tell you, well, this is a rising wedge, this is going to break down. And your target is, somewhere towards the bottom of the wedge. Where this wedge started, right? We've got a couple of higher low areas that need to be broken first. See a nice 3 touches on this line, right? Well, maybe it does break, but then you've got to contest with this uptrend line. So maybe you're a buyer in here. Are you brave enough to be a buyer in this area? Am I brave enough to be a buyer in this area? With commercial interest as a leading indicator, I would say yes. Because I'll tell you what, they're not shying away from buying off or just above the pivots either. They're trying to break this one down here, but, and excuse all of the, the mess, but this is sometimes what you need to do when you're looking at, where's my entries? Where am I going to be a buyer here? If you're all up for the patterns and you think this is going to break down, maybe you're not a buyer until down here. But that market sentiment starts to bottom out. You're going to start thinking about being a buyer and look for a solid pivot. Right now, there's nothing in the way here of saying that this isn't going higher, unless we break down, we come up, and we can't clear out this nice high. So then maybe now you've got a top. Right now, this is bullish. And it will continue to be bullish until otherwise stated. And this is what I'm talking about with wedges, right? Let's just take a peek over here at the S&P. I'm not saying that this was the reason, or that you should look, looking at your 4-hour chart, looking at your rising wedge, and that this was an indication that this was going the other direction. I'm not at all saying that, because what happened in the market is what happened in the market. A little harder to see now with this with this price action, but we had a rising wedge coming up in here, and we're like, well, if they look like it wants to break the downside, here's your target down to the bottom of the wedge. Now it got a nice bounce here. It got a nice, but I don't think anybody knew what was in store here. Well, somebody did. I'm not going to name names. I'm not going to point out the friggin' obvious here. Back here and in this area, where they were consistently right around the extreme negative outlook for this. I'm not saying that anybody got a jump on this, but well, maybe they did. Maybe they didn't. Taking another look at a rising wedge, right? It's, well, this is kind of, kind of wedgy, right? This is kind of like a wedge. Looking at it on a 15, you go, well, is it or isn't it a rising wedge? Like a ascending triangle, huh? Well, it broke to the upside anyway. That's that. Back to ZM, because that's what this is about, right? That's what this is about. That's what this video is about, this journal entry here. Can it continue to go up here? Can it continue to climb? It certainly could. WPR in the 4 hours is a little bit oversold. We're going to it's going to be real interesting to see in the open this week. Coming down here, if we're going to pivot higher. We'd really like to see what we got. You got a nice short-term intermediate pivot here. You could have been a buyer in here if We were really emphasizing the buy opportunity back here on the pivot, just because of the amount of bullishness with commercial interest. So And they continue to be extremely bullish. So not to be ignored. Not to be ignored, setting a new high on the 6 month and the 3 year. So these guys are, I mean, they're not shying away from it. And until we see something, trend is up. Buy dips. Be fearless. This is where bulls need to be, I think, brave, really brave in these areas, especially this area right here, and probably especially somewhere down in here. If that's going to be a rising wedge target area, be brave. There were some brave people. There were definitely some brave people in MES, but it was foolish. But it was particularly foolish. He had a nice target down here. That was great. If you took the scalp, it wasn't horrible. But I hope you recognize that this was an absolute shelling, and with the news and the fear and whatever the news outlets were doing, I don't hold stock in these so-called advisors or article writing motherfuckers who they're all after the fact, man. You gotta look at the chart. The chart's gonna tell you exactly what the hell is going on. Yep. The spread of the news definitely killed it. And if gold wasn't an indicator that there was a lot of fear in the market, and then we had this, then that happened, right? Not sure what was happening with gold, but some people say people were pulling out of gold to cover their cover stocks or whatever, but they liquidated their positions, or I don't really know. What I do know is we played gold all the way through, and this was a really interesting range. But we'll get into this another time. But I mean, this was a really interesting range to play with, and we'll get into the hemming and hawing that we saw, the dominance flip from one to the other quite consistently, and the where people got trapped up here with this higher high, relative to a couple of internal highs here. I think some people thought, hey, this is going the other way, but I mean, when we broke down here, I don't know what was going on here. Just a hell of a bounce, I guess. Bulls just were not ready to give up, but when the bears struck, it was just downhill from there. And we followed it all the way down. So will we get a pivot here? I don't know. Gold's another chart. Keep your eyes on ZM. ZM is what it's about. This is what you came here for. This is what you got to pay attention to. Is look for a blazing breakdown here, and look for bulls to be brave and to continue in the market's direction, because there's no saying that this can't continue higher. Just watch for some real fuckery going on up in here, and get ready to to take your profits, or get ready for a nice dip buy off this pattern. But I'm just speculating here. I have no idea. Market's going to do whatever it wants to do, but at least we've got some good indicators that tell us, hey, we think that CM is prized to continue higher, and we're going to look for a safe entry, because right now it's parabolic. So it depends on what the overall market thinks. Let's take a quick look at sentiment, and then we'll get out of here. I gotta stop minimizing these, huh? Where's my daily? There it is. Open interest really high, blazing on the WPR. Market sentiment's not anywhere near where it could be. This was the top last time, and market sentiment was just, was getting up there. And then people continually stayed from what the indicator says. Continually stayed positive. Market sentiment was high on soybean meal. So, but this is where it topped out. And again, this is something new that we're working with market sentiment. So, do we get up, to a high point? And we didn't top out until here, right at the point in which we broke the ATR range. So they were still pretty optimistic about it, but it's topping out. I do like that comparison. I do like that look. Relatively low open interest, comms are bullish, rising market sentiment, but not quite peaked. This is, if you haven't gotten out, when we peak on market sentiment, that's when it's time to get out. But I mean, with markets, you just don't know sometimes. This indicator is, I haven't really mastered it yet, but we notice quite consistently that before market sentiment bottoms or before it tops, you should have been well out of the trade or well into the trade. So market sentiment bottomed down here, but if we look here, we had already bottomed back here. So much like diminishing open interest and bullish comms, we don't wait for the exact bottom to get in, although you could have waited till the relative low here. But what's going on here? Well, we've got relatively low open interest here, but comms are bearish. They're not bullish on the 6-month index. WPR is oversold. We did have a nice little pump right here when comms moved up 2 weeks running, and they lifted their position quite handsomely. And we did get a nice jump here. So maybe you recognize that and you made some money. We don't like it when it's both open interest and bearishness. I mean, it just doesn't jive well with us. We like high open interest and bearishness, so relatively high, and we were already diminishing quite handsomely. We don't have 6-month index back here, but we did break low. We did break lower on the 3-year index, which is the lowest in this 1-year amount of data that they've been in the 3-year index. So it's very subtle. There's a subtleness to the 3-year index. It's 3 years worth of data. We only represent 1 year on the chart here, but it's 3 years worth of data. So in terms of 3 years and 1 year on the chart, this is a little bit of sentiment change on the 3-year index. If we had 6-month index back here covering the full year, we would see something like this. Comms moving up on 6-month, and as they get closer to the top, they start closing out and they start getting that short. And it wasn't a bad idea. So can we couple market sentiment as a helpful indicator, not as a leading indicator, but as a helpful indicator that, okay, market sentiment's low, comms are bullish, now we've got rising market sentiment. Now when everybody's getting in the pool, it's time to get out. High open interest, bearishness. So open interest is high, comms are getting bearish. If we had a 6-month index, we'd be able to look at it. WPR is oversold, and here's that time to get out. Market sentiment, everybody's, it's like a lagging indicator. Everybody's getting excited about it because, well, oh God, it pumped, it went, it went up 40 something points, 50 something points. You're late. You're late to the party. Market sentiment's moving up. It's time to get the hell out. Does it always look this clear? No. No, not at all with market sentiment, but it can be helpful. Because if you waited for the top, you were already too late. Market sentiment, topped out up here. All right, that's ZM. Um, Boy, that's it's an interesting close here, huh? We did close higher, but what's that? Your doji, your spinning top, whatever the hell it is, whatever candle, you know. Bears try to crush it, bulls defended, and maybe it was just a little profit taking. I don't know. Chart looks bullish to me. I would buy dips, but that's just me. Thanks for tuning in. Thanks for stopping by. I really appreciate it. All aspects of the mind, positive, negative, neutral, whatever. So when I say we, that's what I'm getting at here. There's just, trading is all about psychology too, right? So, if you've got internal struggles of your own and you're battling those, you better work those out. I've got a couple of trade psychology books right off to the left-hand side of my desk here, and I peer at them all the time. So thanks, Larry Williams, for the recommendation of the Zurich Axioms. Am I saying that right? Yeah, Zurich by Max Gunther. That's great. Douglas's book, Trading in the Zone. That's pretty cool too. But if you've got your own, you got your own business going on up in your own head, and you just, work it out. And here are a couple of leading indicators. CoT report. Thanks, Larry Williams. Look at your pivots. Look at your swing pivots, and get into your price action to find some good, safe entries into the trades. Break it. I put my price action down on my lower time frames because I like to see what's going on. And generally what we do too is go put 2 weeks on the chart, because looking at the higher time frames just drive you nuts. I feel like sometimes it's nice to have those levels on the chart, but look at the last couple of weeks of trading and then go from there. We didn't break down ZM until the last 2 weeks because, well, we didn't really need to. We broke it down back here and we saw where we need to get into this trade. So until next time, thanks for tuning in, and I hope you find yourself on the profitable side of the trade.